All right, guys, let's see if we are live now. All right. Good morning, everybody. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. It is Wednesday. My God, I'm still trying to get the days since the past 2 weeks have been kind of weird due to holidays. Mondays being holidays, Fridays kind of being slow. End of the year kind of slogging around, kind of see positioning, see where we are. Still kind of getting used to. Usually, the beginning of the year is when we start getting all of our reports out and everything. I'm gonna be working on that this weekend for Investment Club and our server on Discord and everything like that. So I'm gonna be working on that this Saturday while I have football in the background, doing that for the whole weekend. But until then, we're still kind of, in that weird time. The last 2 weeks, if you work in an office or you work at most jobs, it's kind of just weird and kind of slow. You're not sure if you have, the full 5 days yet. You're still kind of in holiday mode. Monday was the holiday for New Year's. Again, just trying to get some kind of traction in terms of, you know, getting your routine together, especially for a new year. It's a little different for everybody. But again, welcome aboard. It's back to it. 9 a.m. We're here no matter what. 2023, been here. We'll do it next year, the year after. So welcome aboard. Let's go and get to it. Dow futures up 100 points, was up a little higher. NASDAQ up about 0.57%. S&P futures up 0.43%, and the Russell up 0.72 this morning. So again, futures getting a little bit of a bump this morning. We'll go over some pre-market movers. I do have the article here on investing.com. So I have it here. I'm going to go and read it to you. I don't have it on the computer. I have it on my phone. Let's go ahead and go around the horn and we'll go over some of the macro details and everything like that. Crude oil down about 2.43%. Nigeria, there was a Nigeria headline in regards to OPEC oil output rises in December on Nigeria rebound. We'll go ahead and take a look at that chart here in a second. Gasoline futures up down 2.7%. Taking a look at gold. Gold is up this morning 1%, 1863. Silver 0.61 to the upside. Copper's down 0.56. Let's look at the euro. Euro 106.05. Again, we're still looking for that 107 if we're bullish. 130.86 down 10 pips for the dollar yen. Pretty muted price action in terms of that today. Pound dollar up 78 pips, 120.44. Bitcoin still kind of just hanging in there in a weird way. 16,800, 16.5 to around 17,000 on the future side seems to be where we're kind of stable as volumes have dropped for crypto, obviously. And then you get a new cycle. Once it starts breaking above 25,000, everyone's going to start trying to get it again. And then you're going to see that full circle. But again, if you've been owning Bitcoin for a while now, like we have, I mean, you've seen the cycles from 2016, 2017, 2018, 2019 until to now. It's just been that way. Ethereum 1250, again, kind of hovering around. We got, I remember we got to around what 1500 towards the beginning of Q4, and then we sold off. So again, kind of staying around the 1200 area for Ethereum, for the Ethereum investors. VIX down 0.17%. There was a gap up on the volatility index today. We'll go ahead and bring up the charts as we're finishing up around the horn here. We'll bring up the VIX to start. VIX on the hourly, you do have a gap to fill at 2172 to the downside. So again, keep an eye on that gap. We had this gap filled at 2098 on the hourly. No gaps to fill on the upside, but again, keep an eye on this gap here to the downside, 2172, for a possible pop in equities to the upside if that gap does fill. Speaking of the daily, no real gaps here on the daily in terms of the volatility index. You do have that trend line here as resistance. We rejected that around mid-month of December. So again, if you are looking to more downside move action in terms of the equity markets, you're probably looking at around a VIX 25. And again, that's very muted. There's not a lot of fear out there. At least the VIX is not showing a lot of fear. Right now, trading at 2236. Let's go ahead and get to one of my favorite things to look at, obviously, if you guys have been watching us for a while now, it's the dollar. And the dollar right now is down about 0.40% after a nice pop yesterday to around 104.86. 105 being that key resistance. Again, previous support becomes resistance. You still got that trend line. We're still waiting for 101.62. I need that dollar to break down in order for us to show at least some momentum to the upside for equities after a post bad year. And if you go and look at the seasonality, in terms of, again, we've talked about seasonality many times, but a pre-election year, remember, we're in 2023 now, elections next year, it's very, very strong. Whether it's 2019, whether it's 2011 was pretty decent, that was before the 2012 election, and then 2015 was okay, as 2016 was a little more volatile as we got into a bigger election in 2016. So again, historically speaking, the third year of a presidential election, presidential term, especially a new one, tends to be pretty strong. So again, if we want to go back in time, 2019 was pretty strong, and then 2015 was okay, and then you also had 2010 as we were getting out of the malaise of the financial crisis. So again, positive years moving forward, at least seasonally speaking. Doesn't mean that we will. I mean, we could still be in that 2000, 2001 analog where we kind of roll over into 2002, but that's pretty much the exception, not the rule. Usually you get the 30 year of a presidential cycle. Again, this is just historically speaking, it's pretty strong. So again, the dollar, again, kind of sitting on that trend line on the weekly. We want to get to 102 and get that breakdown here. 100 still seems to be that key number. But again, if we want to go back to the April 2020 peak of the dollar, that was pretty much the COVID worse, where, hey, this was before we got all the stimulus and all the rate cuts and everything like that. You could see that downward trajectory as we got to the bottom around 2021. Then you had economic conditions tighten, you had interest rates go up, inflation go higher. You could see as we got to around July, that's what we started really accelerating to the upside in terms of the dollar. So really what we want is to get to around 102.88. That's your peak from April 2020 on the dollar. That'll probably be our first marker. If that does break, then 100 will more likely be in place. Then we could start seeing that, equity prices start rallying a little bit. But again, it really depends on the Federal Reserve and interest rate expectations moving forward. Again, if we get a continuance in increasing in interest rates or hiking, again, my expectation is that, again, January we don't have a meeting. The first week of February we do. I expect a 25 basis point hike and then a pause. But I don't think they announce a pause yet. I just think they will pause, but I don't think they'll announce it in February. I think we'll just get 25 basis points. Again, the market can react in multiple ways. That's going to be tough. We're going to see the charts there. But with that being said, I think we'll get one more 25. We'll get a pause, and then we'll see how inflation goes. European inflation has gone down. German inflation has gone down or is going down. So again, this is Europe where things are moving at that direction, where we're actually sliding off. So again, we'll see where we go from there and play it by ear as we go. Okay, taking a look forward here on give me a second here. Okay, sorry, I had a phone call from one of my staff. I just wanted to make sure, is my volume working or anything? Because sometimes they'll text me, hey, turn on your mic just in case. So there's the dollar. Let's go ahead and take a look at the 10-year yields. Again, very, very important, as we know. We'll go up to the daily here. And again, we had some nice bond buying yesterday. Nice little reprieve from what we were used to lately as bonds were sold off. We have downward gaps as we go. Remember, we had that we had that head and shoulders. We had that drop. We had that head and shoulders. We had that drop. Now we had that bounce. Now you have two scenarios. Either we can roll over again, sure, or we can just do the same thing that we had in the summer where we just continue to rally to the upside and continue here to around 5% or as well in the 10-year. But that really depends on the Fed and what they say in terms of February and their forecast moving forward. We'll get a little bit of insight today from the last meeting when we have FOMC meeting minutes at 2 p.m. Today, Eastern Standard Time. Let's take a look at the S&P 500 futures, and you could see here's really all you're looking at here. 3,900 being your resistance. Again, you could see this upward, actually this downward triangle here, descending triangle or descending wedge, whatever you want to call it. And you can see three sets of support, 3788 to right around 3800 to now around 3820. So again, higher lows, but again, lower highs too as well. But again, we did get a pop yesterday ahead of the bell yesterday, and then we sank. So again, let's not put a lot of weight on what we're seeing this morning in terms of futures. Liquidity is very, very low. We talked about that yesterday. We're not really at a full week just yet. Next week is when we start getting the volumes. Just expect that. So again, I'm not doing tons of trading this week. I only have 2 trades open currently. So really looking at this here, maybe we get back to around 38.50. as we coil into this descending wedge or triangle. Really, the question here is at 2 p.m. What is the market going to react to in the Fed meeting minutes? What is it going to say? Are they going to give us a little more insight on what they were talking about? Maybe a pause, like I talked about in February, or just 25 or 50. We don't know. So again, I think the market's kind of at a standstill, kind of bouncing back and forth between support and rejecting resistance. Just moving forward, that's what we're getting as of this moment. Let's take a look at crude oil. Crude oil did hit this level here around 74, yet bounced off it. Again, that's that weekly level we've been talking about. And you could see here, right there, just kind of hovering around. Energy was down yesterday as well. It won't be a very good scenario if we get energy sinking, and they were the leaders. As we're seeing, the generals are starting to get shot, Tesla and Apple. Though it was a Tesla and Apple led downside flush yesterday. While high betas were doing well, Amazon, Google were doing well, a lot of companies were doing well, but energy, Tesla, and Apple pretty much led to the downside for the market. And the reason I put 75 is because right in 2019, that was our peak in oil, and then we rolled over. So again, you could see that we're kind of hitting that again. It seems to be that support. We broke below it just a couple of weeks ago in the fourth quarter, I believe, to around $70 a barrel. If we do get a continuance to the downside of oil, it may be helping you guys in the pump or everyone else at the pump, excuse me, all of us. But I don't drive much, obviously. But with that being said, again, energy stocks that have been moving higher throughout the year last year, XOM alone up 80% for the year. That's where we want to bring up XLE. So let's go ahead and bring this up here. And you can see in terms of XLE, I put the Fibonacci retracement charts here. Around 84.40 right now, you're above the 20 moving average on that weekly. If we kind of zoom in a little bit more, we'll bring up to the daily. And again, that 38.2 fib extension is holding. Really, your support, in my opinion, I think is probably what you're looking at is around that 50% retracement or right near the 200-day moving average on XLE. If we go into XOM, again, XOM is doing a lot better than XLE, but again, I don't see it that it'll fall immediately. I think around $100 a share is where you're probably looking at a target. If anything like that, you do have some gaps to fill to the downside on the daily. So again, if we do get a sell-off in oil, the real thing that we want is rotation into something else. We don't want a flight of capital out of the market. If not, then everything starts selling off. But again, if we get a rotation into beaten down tech, if we go ahead and get to start moving into more cyclicals, I think the market can handle that than rather just a pure take profit from energy market into cash. That would be pretty bad for the market. Again, we want rotation, not liquidation. Let's go ahead and go over some of the pre-market movers this morning. We'll bring up Apple. I do have Apple puts. And again, a very, very ugly chart. You could see that we did break 129. Really the target, if we bring up the 2-year daily, I could bring that, where is that weekly? Here's the weekly, my apologies. You have 114.15 as your 200-day. If you remember when Tesla broke that, if you remember S&P 500 futures bounced off that. So again, a very key inflection point here, that 114 level. I don't think we get there tomorrow or anything. But again, I still think we get to around 122 on Apple, maybe after the Fed meeting minutes as we're holding puts. But again, you could see worst case scenario, I think we go ahead and tap this support from around May where we got that bounce. If not here, around 115.88. Maybe run out of gas at 114 where it becomes too compelling of a name to not buy because of how much money they make. Obviously, a slowdown is one thing. We know that Apple is a little bit of a cyclical, very consumer focused. It's all hardware and services. But again, in a deflationary environment, people are not going to spend on cyclical stuff. So again, if we kind of stick with that deflationary environment and, money becomes even harder to obtain, the liquidity isn't there, you're going to see retailers fall. You're going to see travel fall. You're going to see a lot of these consumer cyclicals fall with the market until liquidity is back. Maybe interest rates are cut or at least an interest rate pause. But in terms of Apple, there is no gaps, at least that I see on the weekly or the daily. It's just a complete slice on the daily. You could see that fib level, that 52-week low. Actually, is there a gap to fill here? Yeah, right at 120 on the daily. Wow. Can't believe I missed that. My focus was on the weekly, but you could see a small one, small little little gap here. I don't know, you can see it right here, right around 120. So I do have the puts there. Maybe if we do get an ugly meeting minutes, we may get that. On the hourly, you have a gap to fill at 125.04. More likely revisit there. But right now we're up about $1.17 pre-market. Next, we have Microsoft. Microsoft fell 2.77% with a UBS downgrade that we had. You could see that's down about $7 today. Microsoft taking a hit on a downgrade from UBS, where they downgraded them from buy to neutral, saying its growth engine Azure could suffer from a deceleration in growth. Salesforce.com CRM rose 3.5% on laying off of more employees. So now we're starting to see kind of how nature heals. Now we have the biggest inflationary pressure that we've had, and we've been talking about it, is wage. It's all about jobs. So again, if we can, I hate to say this, but we need more employed people or more workers in order to bring wages down and inflation to cool. The Fed wants you to not spend. That's basically it. And some people said the Fed wants you to lose your job. I don't know. But in terms, they don't want you to spend anymore because we need inflation to come down. So Salesforce rose because they're going to lay off 10% of its employees and close some of its offices as part of a restructuring plan. Really, the peak of CRM, at least in the short term, was when it was added to the Dow and XOM was replaced by Salesforce.com. The good news on Salesforce.com, at least if you're an investor, is that you do have a couple of upside gaps. The problem is that you need to start creating a base. But now you're starting to get to 140. You have a gap to fill right 150. I think if you start breaking above 170, 180 or so, there's a gap there. You don't need to dip your toe in the water first in order to get into something. Right now, you want to see at least some momentum to the upside before you start making any moves, especially on a name like CRM, which is relatively expensive on a price to earnings multiple. We talked about price to earnings multiples on the Investment Club. If you're part of the Discord and Investment Club or Masterclass, make sure to read that conversation. It was a great one. Goldman Sachs stock fell 0.4% after Wolf Research downgraded its stance on Investment Club to market perform and outperform. Seems less compelling. The upside, if you remember, Goldman Sachs was one of our top 10 stocks of 2022. In terms of the top 10 stocks, I don't think anyone did very well because stocks fell across the board. And I didn't have energy stocks on there. So I'll get you that recap on the top 10 stocks of 2022. This weekend, I will work on the top 10 stocks of 2023, what I'm looking for and moving forward. Again, that's always towards the weekend as we still have the week for stock trading as we go. Alibaba rose 6.4%. I own that stock after Ant Group, which is of which the Chinese e-commerce giant owns 33%, had received permission from China's security regulators to raise capital. Well done to Alibaba. Let's go ahead and chart that together. We'll go to the, I have an alert here at 106.74. Let's go to the hourly. Nice gap up. Now you got a couple of gaps to the downside. We'll bring up the 4 hour, and you can see that 106.74 was that resistance back in August. So again, that's still my target. If we break above that, there is a gap to fill around 120. I wouldn't do 120s for the same week or anything, but again, you can start seeing possibly some moves. Maybe you start looking at the 112s, 111s or so, but 106.74 is what I'm looking for in terms of Alibaba, at least short term. Tesla rose 1.1%, bouncing after dropped more than 12% yesterday. Ugly session. Its biggest daily fall in over 2 years, following missing expectations. So again, you're going to get some that are just closing up positions, some dip buyers. I think Kathy Wood from ARK was buying some Tesla, and now you can see it's starting to roll over again in the red. A tough one. I think with Tesla, at least moving forward, I mean, you're damned if you do, damned if you don't, at least in a short term at Tesla, because all it takes is one little tweet to bounce. And then you have here this gap to fill out 122.77, at least on the hourly. Break 104.22, I think you almost have to buy the 100 puts, at least to protect your Tesla portfolio, at least make some money on this fall. But it's almost extreme timing. You have to catch it and get the hell out the same day because there's so much so many headlines, there's so much news coming out, And I was talking about that with Investment Club. What scares me about Tesla, especially if you're short, is that all it takes is one tweet or one announcement that Elon is no longer the CEO anymore, or a big fund manager buys a big position in Tesla, and then you go up to 130, 140, and you're holding puts the 100 strike. And that's not how I want to start a new year. So again, Tesla, I'm watching it as we go. I think 104.22 being the low, that breaks. I mean, you almost have to go to the 100 puts at least there. But there is an upward gap here at 122.86. Target was also downgraded 1.8%, 1.9%. Wells Fargo downgraded Target to equal weight from overweight, saying consumers will have to make tough decisions in 2023. We talked about that consumer discretionary. If we start seeing labor softening, if we start seeing more layoffs, if we see NFP on Friday, NFP is super important. If those jobs numbers are red, you're gonna see the market soar in a weird way, because then that shows that labor price pressures are coming down, and that's what the market does want, because that's the biggest inflationary pressure. Ugh. Okay, that was a lot. Let's answer some questions. Lovely XOM downward gap fill yesterday. Yes, XOM and energy did fall yesterday, and you have a couple of gapped up now. You have one here around 106.76. You got one around 110.51, at least on the 1 hour chart. If we go to the daily, you have one gap here around 95.29, which is below the 200-day. That may take a little more time to get there, if at all. We don't know, but again, keep an eye on that. Well done, SJ. What was the OPEC decision? Did they rise oil output? I didn't see any news on OPEC. I did see that Nigeria rose their output of December, but I don't see anything else in regards to OPEC currently. I can look here and see if anything stands out on TweetDeck. OPEC's quota-bound members missed their December output goal by 780,000 barrels per day compared to 800,000 BPD loss in November. So their oil output did rise 120,000 from November. And so again, quota members comply with 161% of pledged cuts in December versus 163. So they had more oil output, but they're saying they're going to cut. Okay, that's where we are. That's OPEC for you. They don't know where they're coming and going sometimes. And remember, guys, OPEC is just a cartel. And I know people think cartel, drugs, right? It's just a collective of oil producing nations. Again, sovereign nations are going to make their own rules. Again, how often does a team not do what you want? How often does a team not stay together? It happens many times, whether it's as big as OPEC or as small as your regular job, or in school or in class, where you have a project and someone's not doing their work. I mean, it happens. So again, with OPEC, so many nations, they have their own sovereign debt, they have their own government, change of elections, and the will of the people, populism, nationalism, keep oil here, don't keep oil there. It's a very, very mixed bag of what can be expected. And that's why crude oil is continuing to go down. But crude oil, to me, right now, what it's telling me is that demand is falling. And that means inflation is falling. So this is a good sign, at least to me. We need crude oil to fall. If crude oil was higher, that means inflation is higher. That means people are still pumping gas. People are not pumping as much gas, maybe not driving as much. Demand is falling. Obviously, China helps. But again, you can see 130 to 74. That's a pretty big cut. I think around 40, maybe 42% from peak to trough. Big. That's worse than the S&P. Just saying. Good morning. Do you know what time the Fed speaks? Yeah, it's not a Fed speak today, Clifton. It's the meeting minutes, and that's at 2 p.m. Eastern Standard Time today. So again, that's just a recap of their last meeting where they raised rates 50 basis points. So really, we just want to see what they talked about. Did anyone kind of, had different sides? What are the doves? What did the hawks say? What do they possibly think moving forward? Maybe some hints. All we're looking for is some hints. That's it. The way I see Fed meeting minutes is a post-game conference of a football coach after a game, a big game. You want to hear the inside of injuries. You want to hear the inside of players, how they did, what to expect moving forward, and that's basically it. So FOMC meeting minutes is really just your post-game conference, media conference. That's it. I mean, will it make a lot of noise? Possibly, as we start getting tighter and tighter here on S&P 500 futures on this downward trajectory. There you go, Henry. Thank you. Again, I love sports. You know me, guys. I love sports. Hopefully in the future I do a sports podcast. But again, it's easier to explain when I use sports. That's really it. So hopefully you guys enjoy the Fed meeting minutes. I will be tweeting about that. Take a look at it. Keep up with us on Twitter at GAR Capital. All info on there. That is always free. Thank you so much for your time. I know this ran a little longer than usual, and I will catch you guys tomorrow for the next morning note. Have a great rest of your morning. We will see you then. Cheers.